21st Century Entrepreneurship with Martin Piskarik.
Hello, my name is Sam Miles. I'm a CPA. Talking today about entrepreneurs and some of the tax planning methods they can utilize to save taxes or avoid unpleasant audit situations or IRS matching situations, as the IRS is getting better and better at catching mistakes made on tax returns. One of the most common things that clients call me and ask me questions about are different tax strategies that their friends or that they've heard about that they're not utilizing, and so they want to know more and more about them. And that's one of the things I notice as being a CPA is we get a lot of these kind of questions, and we're usually the wet blanket that we throw and squash these ideas that people are bringing to us to save some money in taxes. So one of the biggest things that I like to do is to build the narrative that helps people understand what makes something tax deductible. What are some of the things that we can do to change the narrative? Because a lot of times it's not the spending of money that makes a tax deduction. It's the context or the story in which we spent the money for that constitutes this tax deduction. And then documenting that and backing it up so that you're meeting all the IRS's requirements. That's a big thing too, because as the IRS is getting better and better with AI and matching and technology, they're issuing more and more IRS notices than they've ever issued before, with less IRS agents to handle the responses. So it gets to be a little overwhelming, both for the taxpayers and for the CPAs. So it's hard to get your CPA's attention sometimes. I know a lot of my clients feel this way, that they don't feel like they get all my attention that they want. So that's part of the reason why I want to get out on these podcasts and start sharing these messages, is because I think there's a better way to glean this information, and I want to bring it to the people because there's reasons why CPAs don't bring every idea to you and try to get you to do every tax saving strategy. It's because they actually do listen to you. They hear what you want in life, and then they try to get you the best strategies that match up with that. And sometimes that's not being wild and crazy with all the exotic strategies that are out there, because they've listened to you and they've heard you, and with everything you've said to them, they didn't ever hear that you wanted to be wild and crazy, so they don't bring those things to you. But then there's also CPAs that think that the way they do it is the best way, and that's the only way to do it, and everybody else is wrong and probably going to some terrible place when they die. So you got to know who you're dealing with in every aspect of life. One of the most common mistakes that taxpayers make is not understanding all the available tools to them, number one. Recently, the IRS has made it so you can log on to your Social Security number account and see everything that anybody's reported on your Social Security. They call this your transcript. It's everything that anybody reported on your Social Security number. The IRS can also do this for businesses, for you entrepreneurs. Don't know that you got all your 1099s. You can actually log on to this account and pull it yourself, or have your CPA do it, but they might charge you for it. I know I charge for my time. So, but this is one of the neatest things, that we can now do it for ourselves. I think it's a great thing, whether you're an individual or a business. It's a great way to look at your estimated tax payments, see which income has been reported on you, because with identity theft and things going on, it's nice to see what's being reported out there, because there's a lot of times that Social Security numbers are stolen, and then you got an IRS fiasco on your hand because the IRS is expecting you to report all this income that you didn't get. And so you need to know about it, and it lets you get ahead of these problems that could be in your way. Because that's the most common, easiest way to get audited, is to not report some income that you got a 1099 because maybe you moved, or maybe the person issuing you the 1099 wanted to be mean, and so they didn't mail it out to you, but they sent it to the IRS. It could be any number of these reasons, but you need to be reporting all of your income. And this is an easy way to double check to make sure you got all your income, especially if you're like, did I get everything? Especially those self-employed people that get 1099s on their social, and then also get them in their business name. And you don't want to trigger an IRS matching audit because that's just hours out of your life and hundreds of dollars to pay your CPA to respond to these easy avoided mistakes by just logging on to the IRS and checking your own numbers out. Nobody knows your numbers like you do. Your CPA is your CPA, but he's your CPA for 500 other people. Your numbers are your numbers. You know them better than anyone does. Other common mistakes that people make are documentation. The IRS is very clear that you're able to deduct anything that's ordinary and necessary for your business. Now, what's ordinary and necessary in one business is going to be different than what's ordinary and necessary in another business. Some of my clients recently, I'm here in Nevada, they've gone into the pot industry that's been legalized here, and the IRS has a lot of fun showing up unexpected and auditing them for various reasons, not just for their income taxes, but also for like currency transaction reports that we're supposed to issue on cash heavy transaction businesses. There's also reporting requirements with your meals and entertainment. You need to write on the back of the receipts who you're with and what you talked about if you want to deduct those things. Get familiar with the rules that are familiar with your industry. Know what you're supposed to be doing. Take a moment and educate yourself. Ask your CPA some of these questions. Tell them to explain some of the pitfalls to your individual business. And then it's knowing your numbers, going back to knowing your numbers. You need to know the key performance indicators on your business, like what indicates what's going on in your business. When you know your numbers, they tell a story for you. They tell what went on. I always ask my staff, hey, can you tell me the story that went on this tax return? Because there's a story that went on in the year that's explained on somebody's tax returns. I look at those numbers and they tell me a story because I look at numbers all day. I've honed that skill. Now, you as a business owner, you need to be tapping into your CPA and pushing him to tell you what he sees because he sees stories and you need to see the stories. And when I tell a story to clients, sometimes they push back and they're like, no, this is what's going on. I'm like, oh, that's interesting. I didn't know that was going on in your business. Okay, here's some things to watch out for. So when you talk to your CPA and, iron sharpen iron, so also a man sharpeneth the countenance of his friend. Let's substitute friend and CPA there. So you guys talking together, you can get a clear picture of what's going on in your business versus what he thinks is going on or what you think is going on, because he reads numbers differently than you do, he or she. I apologize. There's a lot of great CPAs out there that are women. I don't mean to be like that. My ex-wife's a great CPA as well. So I don't mean anything derogatory by that at all. Martin, it's an interesting story about my career, why I'm a CPA. I went to school for 3 years to be a chemical engineering major. And I actually served a Mormon LDS mission down in the Houston area. And so I figured I was destined to be an oil and gas chemical engineer for the rest of my career. So I went down there and did an internship. And I promptly found myself on the loading dock because that was more fun than watching these panels and babysitting this equipment in these refineries. And the gentleman that got me the internship, he saw me on the loading dock one afternoon and he's like, Sam, what are you going to do when you go home? And I go, change my major. And he started laughing and he says, do you want to work in my office for the rest of the summer? And I'm like, air conditioning in Houston? Absolutely. Let's do it. And my dad's a CPA and an attorney. So I have a background in this area that's unique and very sharp. And so he put me to work in his office doing this and that. And then he got a sales tax audit notice. And he's like, hey, can you handle this before you go home? And there was about 3 weeks left. And I'm like, you bet, I'll fast track it. And so I called the auditor, got him right out there, gave him everything to look at. And he asked for the purchase journal. So I gave it to him. I didn't know. I'm not an accountant, but I gave him the whole purchase journal. And the first thing he did is he went through that purchase journal and he put an asterisk on every invoice that ended in 000.00, Because of course no sales tax was charged on that. That's obvious. I could have figured that one out, but I didn't know what he was doing until he asked me to pull those months of invoices. And there was two mistakes in the whole 3 years he was looking at. And then he took those errors and extrapolated that over the whole population, which left him with an assessment of over $56,000. And I was mortified because I was put in charge of this and I gave him the keys to the kingdom. And so my statistics background started kicking in as I worried about this. And I'm like, wait, he had a targeted sample. He can't extrapolate this error. And I went back and I checked this with my statistics because I love baseball and that's all statistics. And so the next day I said, hey, I don't think you can extrapolate this error when we did the findings report with the CFO there. And he goes, no, this is the way we do it. And I'm like, I disagree. I would like to talk to your manager before I accept this. And the CFO kicked me under the desk and I put my hand on his shoulder and I'm like, trust me, I know I'm right. And he goes, okay. Like, and he was looking at me wide eyes, like big as saucers, like this little punk kid, right? And here I am just certain that I'm right. And so the manager came out the next day and I explained everything. And the manager looked at him and said, is this right? Is this what you did? And he goes, yeah. And he goes, he's right. This is not okay. You have to do a blind sample, not a targeted sample, which is what I said. And the assessment went from $56,000 to $2,600. And that CFO to this day is one of my dear friends. And he's like, Sam, go home and change your major. Change it to business. So I went home and I talked to my dad, and my dad and I have a normal father-son relationship. We don't get along often. And here I am as a young kid asking my dad for advice, probably for the third time of my life. And I'm like, hey, Dad, what do you think? And he told me, he goes, Sam, you have a gift with numbers, you really do. He goes, but if you're going to be a business major in accounting, because that's the language of business. And if numbers don't talk to me, I love numbers. They tell me stories. Most CPAs are like me. Most of them probably not as outgoing as I am. We tend to be more introverted. I'm a little bit weird because I, have such a diverse background. And so if you find a CPA that can talk to you, that's the CPA you want to talk to. What I'm discovering is CPAs to talk to are harder and harder to find these days. So what we've started to do is offer some consulting services. We don't need to prepare your taxes, but we can go through and give you some ideas on how to save money. One of the easiest ideas, and this is one I love, and we're working on getting our product better and better every year with this. It's called the Augusta rule, and it comes to us from golf. I love golf. So from Augusta, Georgia, where the Masters tournament is held, when the Masters tournament's held, these people rent out their homes to the golfers or the corporations that are coming in there for under 2 weeks. That's the key, 15 days, less than 15 days. That's what the IRS states. And they rent it out. They can get paid $50,000 for their house because that's what it commands for rent for the Masters tournament. And they don't have to pick that up and pay income tax on it. And the corporations that are paying them rent get to write it off as a tax deduction. So you entrepreneurs that have your own company and have your own house, you can rent your house from you can rent your house to your business for 14 days, pay yourself this rent, not pick it up and pay income tax on it, decrease your taxable income on your business. So it's like, and then here's the key though, documentation. The IRS requires that you do it for a business purpose. So you got to have your corporate meetings on those 2 weeks. And so we want to, help you do the corporate meetings. You got to talk about reasonable compensation for you owners that are also paying yourselves on a W-2. A lot of times you're overpaying yourself, believe it or not. We got reports that we can run and we can drop that down so you don't have as much going out in Social Security and Medicare and save you some tax that way. And all this is legal and legit. And this is what people want. This is what you want to hear. So if you go, send us an email. It's rentmyhome@guardiancpa.com. Again, that's rentmyhome@guardiancpa.com. And let us know you're interested in this. We'll send you some information. We can schedule a consulting appointment with you. We can just do the Augusta rule for you. You just write yourself a check every year. You're code it to rent. CPA doesn't even, you file everything away. CPA doesn't even need to know that you've done it. You might want to mention it to him so he's not in the dark. But a lot of CPAs are so busy getting tax returns done, we don't even have time to do this right. So if we're doing it, we're cutting corners. So if you get audited, you're going to lose the deduction. So this way, we're not cutting corners, we're doing it right, and you can get everything dialed in, dot your I's, cross your T's, because the IRS is getting better with technology, and we got to get better too. We got to dot our I's and cross our T's and do things right. I'm all about doing things right, but I'm all about saving all the tax I can while I do it right. And if the rules are there, I'm going to take them to my advantage. So a lot of you entrepreneurs, maybe you've already started your business, you're doing it on a Schedule C as a sole proprietor, and you're wondering what's the next step, or maybe you've already set up a corporation, you're not sure if you're structured the right way. When you talk about your entity structuring, it's important to know what the best structure is to be in. So to be able to determine this, you need to know what your ownership structure is the first place to start. If your ownership structure is just you or just you and your spouse, then you can file on a Schedule C as a sole proprietor, because even if you have an LLC set up, because your spouse is a disregarded entity for tax purposes when it comes to LLCs, unless you've selected to be a multi-member LLC, in which case you are required to file on the 1065 or the partnership return. So if you have multiple members of an LLC, and they're not husband and wife, you're on a partnership return, then you have the possibility to elect to be taxed as an S Corp. And that doesn't mean you changed your corporate structure. Everybody gets confused about this. If you're an LLC, you're still an LLC, and you're set up in whatever state you set it up in as a domestic LLC or corporation. Any other state that you're doing business in, you're doing business in that state as a foreign corporation or a foreign LLC, because you're not set up in that state. Now you can register to do business there, but you're not set up in that state, so they see you as foreign, because we're a republic, remember? We're a republic of states. So each state has its own independent laws. So that's important to understand as well when you're setting up your structure. So being an S Corp, the benefit to this is if you have your own business, like a CPA or a dentist or a professional, but you work in your business and you own your business 100%, or you and your spouse, okay? These are prime S Corp examples, because as someone that works in their business, you're required to pay yourself, okay? And if you're doing it on a Schedule C, then all of your earnings are subject to self-employment tax. Now, self-employment tax is Social Security and Medicare tax. Those are the same taxes that get withheld on a W-2. So self-employment tax is both the employer and the employee side of those taxes. So it's the same taxes, but it's twice, because you're doing it both as the employee and as the employer. And that's a hard thing to wrap your head around as a new business owner, but once you got it, you got it. It takes a year or two. So you need to pay yourself reasonable compensation. Now, let's say as an attorney, I make $750,000, $800,000 a year, but I'm the only owner of my company, and $800,000 a year, I'm maxing out on my Social Security, because that's 150, 165. They keep raising it up because Social Security needs money. Okay, so that minimum is going to keep going up, because people have abused this S Corp rule by paying them $12,000 a year. Well, the IRS has gotten wise to that. They're like, nope, we're going to audit you for reasonable compensation. And if they catch you abusing this, they throw the book at you. When it comes to the IRS, I have a saying that I want to share with everybody. Little pigs are cute, but hogs, they get slaughtered. All right, so remember that. It's always nice to be a little pig and have your nose in the trough, but you get a little greedy, they're going to come by, and they're not going to take it easy on you when they come by. And they're using technology in a big way. So they're hunting now more than they're just auditing. They weren't allowed to target audit, like cops aren't allowed to target pull over people. Well, I think things are going to be shifting that way when it comes to IRS audits. They're going to be using technology to come after things that we do wrong and we don't realize it. So that's a big thing to be aware of. When you're selecting an S Corp status, what the benefit is let's say I own Kellogg's Corporation. My parents owned it, they left it to me, and I just really love driving that forklift. I love that because I really do love driving a forklift. All right, so, and I drive the forklift, and a forklift driver gets paid $65,000 a year. So I need to pay myself $65,000 a year. Now, I also own Kellogg's, and it makes $1 million a year, and I get that too. But I don't pay any Social Security and Medicare on that. And that's what they're talking about when it talks about reasonable comp. So if you're in the sales department or you're the attorney working, you need to pay yourself what an attorney would get paid. Is that $250,000, $300,000? That's why we do these reasonable comp things, to show you what it would be. And these things have a time date stamp on them, so they hold up in an audit because you did it before. If you do it after, it's still good, but not as good because you did it after the fact, okay? So you're kind of backing into the answer you want. That's not okay. You do it before, now you got something that holds water with the IRS. And that's what it comes down to, is documentation and doing things the right way. That's the way to do it. And you want to talk about, holding the line. And that's a big thing. We have to do ethics and training in ethics every year as a CPA, because we kind of hold the line when it comes to the laws. And if we're going to allow people to break them, we're letting these companies take advantage of all the employees that are out there working for these companies, because we're making them preferential tax treatment by the way we prepare it for the companies. And that's not fair. We have to hold the law. So if we do things right, we can avoid taxes and feel comfortable and safe and secure. We want to cut corners. We're always going to be looking over our shoulder, maybe feel like we didn't wash our hands. Like, that's not a good feeling to have. So we try to do things right. We try to do it the right way. Now, all you guys listening, if you have questions, you want to follow up, maybe we piqued your interest in some manner. Honestly, we're not looking to take your tax work. We're looking to help you save taxes and give you some good consultation, some attention that maybe you don't feel like you've been getting. If you want to send us an email, if you're interested in the Augusta rule, send an email to rentmyhome@guardiancpa.com. Again, that's rentmyhome@guardiancpa.com. Send us an email. We're happy to have a 30-minute consultation via a Teams call, so we can sit face to face and have a few minutes and get to know each other, and then fire away and ask your questions and see if we can help you out with the services we provide. We feel like we have a good product out there that people are looking for. We're looking to help your CPA because they're so busy doing taxes. And I used to be in that rat race, and I'll be honest with you, a client sued me, and this wasn't even a client of mine. This was a partner of a dear client of mine, and they sued me just because they went scorched earth on everything. And I'm like, man, there is no good deed that goes unpunished. And I'm like, and this lawsuit's frivolous, and it was fine, but I'm like, I want to teach people how to do things the best way. And that's why I wanted to start doing this consultation work. I'm looking to help your CPA. I'm not looking to step on his toes. If he wants to talk to me too, if we come up with an arrangement, we're just another feather in your quiver to, help you protect your assets, help you protect your taxes, make sure things are doing the best way for you. And we're looking at it from just a different way to do it. We're not looking to make your CPA feel bad, or like, we're just looking to accentuate the service they're already providing to you, because, you got to have boots on the ground, and then you also need to have somebody looking over your shoulder. And that's what we want to do. We want to look over your shoulder and help you out. Again, it's been great talking to you today, Martin. All you entrepreneurs out there or want to be entrepreneurs, take your time, get to know your numbers, make sure you have enough cash flow before you take that leap. Have a backup plan. There never hurts to have a backup plan. But if you want some help, if you're looking to get someone to look over your shoulder, you want to know if this is a good fit for you, again, send us an email. It's rentmyhome@guardiancpa.com. You can go to our website, guardiancpa.com as well, learn a little bit more about us. You're welcome to give them a call. If you reach out to our office, my assistant is Regina. If you'd like to schedule an appointment with me, ask for Regina. She could get you on my calendar as soon as possible.
21st Century Entrepreneurship with Martin Piskarik.
Imagine a space where triumphs, trials, and tales of entrepreneurship come alive. Welcome to the 21st Century Entrepreneurship Podcast, a gold awarded journey hosted by Martin Piskarik, connecting with listeners in 95 countries and ranking in the top 0.5% of all podcasts. Join our exclusive community, elevate your perspective, and embark on the path to success.